Kumar Rakesh, India Analyst, IT and Auto with PNB Paribas joins us now. Kumar, good morning. Thank you for joining us. Why have auto stocks done well this year, and do you think the party will continue?
Good morning, Nikunj. Thank you for having me on the show. If you look back over the last 4-5 years, it has been very challenging for the auto industry. Various regulatory norms changed, which increased the prices. The demand collapsed because of the COVID lockdowns. And then the commodity prices dramatically shot up, which impacted the margin. So from the auto stock perspective, a lot of various headwinds had been consistently hitting the industry over the last 4-5 years. Now it appears that most of those headwinds are largely behind. The regulatory challenges are behind, and the price has largely been absorbed by the consumers. So it appears that now we have a clear runway on the demand and margin trajectory, and that is something which you would see started showing up in the stock price movement as well. Through this year, stock prices of auto companies have significantly expanded, and especially over the last 2-3 years as investors are gaining more comfort on the demand as well as margin side of the equation. That being said, looking at some of the valuation, it has definitely stretched, and now possibly would be the time to getting a little more selective and picking up the auto stocks incrementally from here on. There are still some pockets which are not showing very resilient demand, and that could be two-wheeler area. Passenger vehicle industry is quite robust, and commercial vehicle industry is seeing a strong upcycle that should continue for a year or two at least. In that context, being more selective in the auto stock from here on would be a more prudent choice.
That you are being selectively positive about then, Kumar?
Sorry, I didn't get the question.
My question is, so which are these stocks that you are selectively positive about? What's your pecking order?
Sure. So the companies which are more exposed to the passenger vehicle segment, commercial vehicle and global auto side are the ones which we are more positive on. That would be Maruti Suzuki, Tata Motors, Ashok Leyland, such names. The global auto industry also is seeing a very strong recovery despite the macroeconomic challenges which we hear. The micro data which we track on a regular basis are quite supportive of the global auto demand recovery. That would be positive for the companies which are exposed to the global auto demand, and also the auto ancillary companies, which are far more exposed to the global auto side, and those would be far more preferred pick.
For Tata Motors specifically, do you think there is a upside risk to estimates further, or do you think the best has already been priced in?
For the last couple of quarters, the company has been consistently surprising us positively on their performance as well as on the guidance side now. If the company continues to enjoy the low discounting and the realization benefit which they are currently, there is definitely a positive upside, because consensus now is gradually moving towards the guidance which the company had earlier given. And there is a chance that the company could revisit those guidance and possibly upgrade those guidance with the second quarter result. If that were to happen, there is an upside risk.
I'll specifically talk about the trend in the passenger car market. The aggregate market is growing at 5-6%. SUVs are growing in double digits. Sedan is not growing. Do you see that companies like Maruti, which also have a big presence in sedan market, they actually could be into a rough weather? Because, okay, you will sell SUVs, but your sedan, if it is not selling, it will have impact on margins. It will have a demand on operating leverage. And if there is a discount phenomenon at factor, then obviously the realizations will plummet.
Yeah, you're right. There is definitely a challenge of two different segments of the industry performing absolutely diagonally opposite to each other. SUV space definitely is a high growth segment. But the good point is that a large part of these challenges which you referred are already reflecting in their earlier performance. If you look at their market share, it has already significantly come down from more than 50% to almost 42%. And that part of the transition which you are referring to is already reflecting in the market share performance. And now they have started launching SUV models. So there is a chance that they would be outperforming the industry growth, and they themselves are targeting a market share leadership within SUV. If that were to happen from a low market share where they currently are relative to their recent history, there is a possibility that they continue to gain market share. May not be able to achieve where they were or entirely recoup their lost market share, but the market share gain possibility driven by the recent model launches is definitely there. And if that were to happen, you'll see the volume improving, and that should have a benefit on the margin as well. But the point which you made about the discount is definitely relevant. And that is something which needs to be tracked closely, because in the result which they announced yesterday, the discounting increased. And if that trend continues, that is something which can possibly start impacting on the margin recovery side. And hence, we'll be closely watching that. In the first quarter, they were able to absorb that increased discounting. Their margin adjusted for one-off were largely flattish on a quarter-on-quarter basis. So hence, not a material impact so far, but definitely something to closely watch out for.
Kumar, when it comes to the entire two-wheeler space, who do you believe is likely to stand out? You did speak about sluggishness here. There have been new launches that we've seen taken place. The Hunter 350, for example, that took place recently by Eicher. What's your outlook as to who is likely to emerge triumphant within within two-wheelers?
So the overall two-wheeler industry will likely see a muted growth, in our opinion. A couple of reasons for that is the significant price increase that has happened in the two-wheeler industry, and also the high penetration the industry is now reaching to. That would imply that the overall industry would likely be muted, and you add to the mix the EV disruption, which will also eat into some of the incremental demand for the industry. The companies which can potentially be slightly less impacted could be a company like Bajaj Auto, which is relatively far more diversified. It has three-wheeler business and export as well. And Eicher Motor, the near term could be challenging with the increased competition in its space, but from a longer term perspective, the Eicher could be relatively lesser impacted compared to others.
Kumar, really appreciate your time. So glad you could join us with your views. What do we